Hey guys, Akil here, and welcome back to another episode of the Trading Coach Podcast. Thank you, as always, for joining me and deciding to spend a little bit of time with me 3 times a week or all day if you're binge watching these episodes. In today's podcast, we're going to talk about a handful of topics, including taxes and why I prefer not to pay them when I'm supposed to. We're also going to talk about the different type of ways you can set up your trading business. So a little bit of a comparison between S Corps and LLCs. We're also going to talk about writing off losses. And I want to make this clear. Obviously, when it comes to anything tax related, you should consult a tax professional. But when we talk about writing off losses here in the podcast, I'm talking about losses from my investment days, not my trading losses. They are handled differently. So before you jump to some conclusion, understand that I'm talking about investment losses from when I was a stock investor a very long time ago. So I hope you guys enjoy the episode. If you do, remember to hit that like button, subscribe if you're here on YouTube. Leave me a review if you're listening to this on, say, iTunes or something of that sort. And of course, share this on social media. Lastly, if you want to get involved in the conversation in the live trading room or just with the best community of traders in the world, make sure you sign up for that risk-free 14-day trial at tier1trading.com. That's www.tier1trading.com. I'll throw a link in the show notes as well, and I look forward to seeing you there. Had a near miss yesterday on a pattern formation here, right? And a lot of you guys had your eyes on a bear bat pattern, excuse me. This is one I was stalking as well on tax day, Great American Tax Day. I always wait until the very last minute for taxes. Very last minute. Uncle Sam's gonna get his as late as he possibly can. Every last minute, yeah. And my accountant says the same thing each year. She's like, "Don't you want to pay quarterly?" No. "Don't you want to pay quarterly estimates?" No. I'm not giving them nothing until I have to. No, I don't want to pay quarterly estimates. No. It was funny because you grow up and like tax day was a big day. You get your refund and all that stuff. And then my dad was the one that really schooled me on stuff. For my dad he was the one that told me like you realize when you get a refund, that just means that the government took more than they should have from you. And I was like, oh, I thought it was just free money. He's like, no, they just took more from you and got an interest-free loan throughout the rest of the year. And I was like, oh, hey, I see what you're doing. I see what you're doing. So ever since then, and he's adapted the philosophy. His goal is to break even on tax day. If he can if he can be completely break even, then he's done everything the right way. That means he gave up no free loans, right? So my goal, my philosophy, I don't know if it's the best one to have or not, but my philosophy has always been the same. That's why I don't like paying quarterly. I'm not going to estimate how much you should take from me, because what if I estimate wrong, right? I'd much rather have, my philosophy is always this, just in business, right? Cash on hand is important for me. Why do you think cash on hand is important? Especially in what I do. I'm a trader and a real estate investor. Cash on hand is important. Because as an investor, what can cash do for you? What can you do with cash? I got these big hands, all this cash. Yeah. As an investor, cash is what produces you more cash, right? My mindset is always this, right? My money works for me, right? Great quote from The Richest Man in Babylon, that book. Great book, especially if you guys are new to investing, or if you have maybe kids or people that are not, they're not really number people. Richest Man in Babylon, Great book on investing. Reminds me of Basic Economics by Thomas Sowell, where it's more of a story than like a book full with numbers. Great. But he said, make your money your slave, right? Touchy word, I know, but make your money your slave. It means your money works for you, right? Your money should work for you. My money has one purpose: to make more money. Go out there, money. You come back with more of you, right? I send my money out. My money goes out there and makes some friends and comes back towards me. So cash on hand is always key for me because I can invest it. I can put it into the market and make some return. Nick said, I pimp my money out. Again, reminds me of an old Def Comedy Jam skit where Chris Tucker was pretending to be talking about Michael Jackson being a pimp. But we can't make Michael Jackson jokes right now, so we're going to leave that away. Go get my money. But yeah, cash on hand, I can invest it in the markets. And if I'm doing my job in the markets, my cash is going to create more cash, right? I can invest it in a property. I can invest it in a business. And what do you think that's going to do for me? What is that cash going to do? Is it going to sit there and drain? Maybe if it's a bad investment, but that's up to me to make a good investment call. No, it's going to create more money, right? So I love cash on hand because it will create more cash on hand, right? The way I see it, if I'm paying the government quarterly, all I'm doing is limiting the amount that I can invest, which limits the amount of income I can produce. Does that make sense? If I've got $20,000, right, that I can invest in something, but I decide to give the government 10 just because, right, now I only have $10,000 I can invest in something. That essentially cuts my return on investment in half. Why? I'll just give it to you all at the end when it's all said and done. I don't want to get some back and be like, hey, you gave too much. I just cut off my own foot by doing that. Yeah, so I never believed in the quarterly. That's just didn't make sense to me. I understand people don't want to pay the big the big bulk amount at the end, but if you're financially responsible, right? Any of you guys business owners or entrepreneurs have your own business? Or even if you're like an independent contractor, that counts, right? Something where you're not getting taxed, right? What should you be doing anyway with your money? Do you spend it all right away? No, you typically put some aside for a rainy day, obviously, but you put some away aside for taxes, right? Taxes and emergency. So you should be doing that anyway if you're a smart business owner. And so it's not a big deal because at the end of the year, you have that fund available where it's like, okay, well, I know taxes is coming up. I got to pay on April 15th. Let's make sure my account's right. And then when you actually get the number, you just pull it out of there. Ooh, yeah, self-directed IRA, so it's tax deferred. I remember when I was looking at IRAs, I did, what was it? Because the business one, you could put more in the business one. The cap on how much you could put in the business one is higher than the personal one. So many ways, but yeah. So take that, Uncle Sam. Get it last minute. Hope he's not listening. But all right, let's go down to lower time from here. On the pound dollar, let's go down to the day trading time frames. Yeah, See, I was thinking about that. I preferred to keep it in an LLC just because of I don't like with the S corp. You've got to pay yourself with some consistency. I'm really, I don't know the word. I'm inconsistent with how I pay myself. Like I don't pay myself unless I need to pay myself. So with LLC, it's a little bit easier because you can just do owner distributions. Where if you're an S corp, you have to draw a salary. Now I suppose you can always just reinvest that salary, but I've always felt like it's a different step. Yeah, and I did that because in trading, you guys understand in trading. This was before the real estate business. In trading, because I was a swing trader. there was no consistency in when I was drawing a salary, if that makes sense. Like I'd have really good months and then I would have months of drawdown. And in the drawdown months, I didn't want to draw a salary while I'm losing money. So like I only want to draw a salary when I made money, and it was, that's one of the reasons I decided to go with an LLC or stay with an LLC. But Mark, you guys remember Mark Sedlock at all from the other company? Because he set his up like as an S corp, and he was telling me about, again, some of the benefits of doing it. So it all depends on what you want. Again, for me, it was just being a trader. I didn't expect to have a consistent salary. So I didn't want to be in the position where I had to kind of pay myself a consistent salary just because I never knew. Sounds bad, but you never know when that money's going to come in. And when I started, I didn't, there wasn't enough to kind of just continuously take stuff out. But I'm real sporadic with how I pay myself. It really depends on what my goals are. But I prefer not, if I don't have to, I prefer not to pay myself. But yeah, the benefit, pros and cons, consult a business professional to see which works best for you. Yeah, as a trader, it's tricky, yeah. Yeah. Now with the real estate business, it would be a lot easier because that's more, that's inconsistent as well, but it's more consistent, especially the more properties you have. So that one would make sense, that one, for the real estate business. But for a trader, yeah, it was weird. I'm like, I'm not that consistent. By the way, I think I have 1 year left of I'm still claiming losses from my early trading days, guys. You know that? I think I have 1 year left. I'm still, yeah, because you can only claim so much a year. I think you can only claim, I think it's like 3,000 a year. I think it was 3,000, right? So it'll give you, I believe it's 3,000, yeah. So I've been claiming them for years. I had a lot of losses in the beginning. But I think she says this is my final year. Next year is my final year. I don't know if it's smart. I forgot all about it, but this is why you pay a professional. It helps, I'll tell you that. All right, lower time frame, pound dollar. We'll get not too much here. We're gonna get to some of the minor pairs a little bit later, which are more appetizing. I know CAD yen was on my radar, but really not much here at the pound dollar. So let's start moving through these pairs a little bit quicker. Let's go to euro yen. Jabbing along here. Yeah, I believe it's it's either 3K a year or that. I think that's the max. Again, I'll let her. It's either 3K a year. That's what she broke it down to get it all off the table. But I think it was 3K. Yeah, you can't just write off. If you lose 20,000 in a year, you can't just write it all off at the same year. At least here you can't. It's kind of like like when you make like improvements and stuff for houses. Like you can't write everything. You gotta write certain parts of it off per year. Yeah, so you can't do everything in 1 year here. Probably because people would. Shoot, there'd be a lot of traders getting some refunds or something like that. You write off the whole thing. Here you can just minimum years. Wow. I think I prefer to have it a little bit each year. When you end up paying taxes. All right, euro yen, Dan.